Gonna wait for a couple more people to join because right now I'm talking to myself. No, I'm not. Hey. Good morning. I'm waiting for a couple more people to join. So far, there's only 6 people in here. Whoever's planning for staying on the duration of this live or planning on staying for the duration of this live, smack that screen 20 or 30 times in a row, just like that. Brings in a lot of new traffic if you're planning on staying. It makes the lives way more interesting. I get nothing from the likes other than it's a much more interesting and lively live if there are more questions. Otherwise, I'm just talking to myself, which I can do for an hour, but it's a lot more entertaining when there's people coming in here and going, what do you think of this? What do you think of that? Jim Bunny, hello, good morning. And thank you for hitting that screen. You'll see as that number goes up there where it says 97,112, the amount of people in here will go up as well. Explain what's happened with TSLY and why you're not making as much. So the way covered call ETFs work is the more volatile the stock is to the upside. So it goes up a lot, it pulls back a lot, it goes up a lot. It's very volatile. TSLY can sell their covered calls for a higher premium because the idea is, I'm just going to make up a number, but say the stock is $100 a share, and then it's 120, and then it's 150, and then it's 130, and then it's 170. Like, it's moving a lot. Investors are sitting there going, "Oh man, this stock keeps going up. I'm willing to pay more now to buy the shares later at a lower price if it does in fact go up." So it could go from 150 to 180, but you bought the one. You were able to call those shares away at 150. The premiums are so much higher. They can make more money. But when the stock is less volatile and the stock is $100 a share and a week or 2 weeks or 3 weeks later it's like 103, 104, I just buy the shares right now. I'm not expecting it to have a big move in price. I'm not expecting the stock to go from 100 to 150 or 180 or anything insane like that. So why would I pay this premium to buy the shares at a lower price in the future when I could just buy the shares now at the low price? So the premiums are going down. So they're able to make less money. They also just did a split. Not good news. They did I think it was a 2-for-1 or something like that. So you get 2 or 1 for 2. So you're getting less shares. They took some of your shares away basically to raise the price of the fund. So stock splits are usually a sign of trouble for a company. It means that they're losing money, or in some instances it means that they could be delisted. Not for this one, but usually penny stocks, like AMC or something like that. It also, it's like a legitimacy, or not legitimacy, but what am I trying to say? People don't take you seriously when you're $3 a share, $2 a share. When the stock is $20 a share, visually, you're more of a serious investment. But we see through it. It's a desperation move. The stock is $2, $3 a share, or whatever it is. It's losing a lot of value. They want to raise it. I would imagine also maybe for TSLY that there might be something in there about paying less in dividends. I mean, if you have 200 shares in the company, now you have 114. I don't know if the dividend is going to be impacted by that or not, to be honest. Thoughts? Should you buy SOUNDHOUND before the big announcement NVDA has? NVDA didn't buy before the announcement, their earnings report. NVDA just invested in the company because they see potential there with their smart technology, their voice recognition. And that made the stock kind of move a lot when people found out that NVIDIA took a position in really essentially what's a penny stock. I can't tell you if you should buy SOUNDHOUND or not. I know some people have. It's up 29% yesterday. It was up, I think, 30 or 40% yesterday. It's up 29% today. Yesterday, it was up 48% over the past couple of days. It just keeps going. Now, look, you're rolling the dice here. They could have earnings and it could be terrible. NVIDIA didn't buy this company because they knew their earnings were going to be good. NVIDIA isn't making a stock trade here. NVIDIA is investing in the company. They're not worried about what are their next earnings. NVIDIA is thinking, what is this company going to be able to do for us? How could we work together with this company in the next 10 or 15 or 20 years? So maybe their earnings come out and it sucks. NVIDIA is not going to be sitting there going, damn it, we're losing money on our trade, because that's not how they're viewing it. So don't look at it like a quick turnaround. Trading into earnings can be incredibly volatile. I did post a video. There's more on SOUNDHOUND. You can go watch the video. I posted it yesterday. Hi, good morning. Hey, Coco, good morning. Is Sound still a buy? Can't tell you. All right, I'm going to drop down to the bottom. We'll work my way back up. Thoughts on Google? I like Google. Let's take a look here. Over the last 10 years, Google is up 353%. It has strong buys across the board from analysts. Their growth is rated at a B. Their profitability is rated at A+. Their momentum is C+. The revisions is B+. The only bad grade they have is a D+ for valuation, which means that they're a little bit overvalued. But it's really not by much. And sometimes people are willing to pay a little bit more. People are willing to pay a little bit more for a stock if they think it's going to be more profitable down the road. The sector price to earnings ratio is 15 times earnings, and Google is 20 times earnings. So it's not really overvalued that much. Any comment on Acre Carbon Care? Never heard of it. Never heard of it. Please stop spamming. Yeah, Norway, you're gonna get booted. You don't have to spam the chat. I'm gonna see everything. Opinions on Disney. I like Disney. I think that they had some roadblocks and some bumps recently, but they're, I think, maybe past that. They've also reinstated a dividend, which is good news, although we'll have to see how long it stays. They are up year to date 19%, which is very good. In the last year, though, they only went up 7%. So it looks like Disney could be on the turnaround here. Their 1 year price target, according to the analysts, is 116. So 8% upside. What do you think about Workhorse? I think it's a penny stock, right? It's WKHS. It's 32 cents. Wouldn't touch it. Wouldn't even consider it seriously. Good morning. I noted SPY and SPYI and JEPI are similar, rather not have multiple fees. Thoughts? I think they are rather similar. Let's take a look here. We can compare them both right now. Wait, are you talking about JEPI with a Y or JEPI with an I? Because I just want to make sure first before we get into it too much. So SPYI has a slightly smaller fee. Let me go to the bottom and see what you said. Yeah, okay, JEPI with a Y. JEPI with a Y versus... So JEPI has an expense ratio of, I'm just going to round up and say 1%, and a dividend of 19.82%, and SPYI is 11%. So it's a much higher dividend with JEPI with a Y. Year to date, SPYI is up 2.7%, and JEPI with a Y is down 1%. I'm not sure what JEPI is. I'm not sure if JEPI is only selling covered calls, or if they do a hybrid approach, like they invest a little or not, but JEPI has a higher fee and a higher dividend. Thoughts on AZN, AutoZone, right? No, AstraZeneca, close. AstraZeneca, $66. Year to date, it is down 2%. It has almost a 3% dividend, which is good, but they have a dividend safety grade of D, which is not so good. Hey, there's 580 people in here. Good morning. If you've never seen me before, my name is Kenneth. Read a little bit about me here. If you're interested in the stock market, you are in the right place. This is the most must-see live on all of finance TikTok. On Sunday, there were 16,000 people in this live throughout the whole show. Right now, there's 660, but they're going to come and go. But at the end of the live, it'll show me the grand total. Last Sunday, it was 16,000 people, which was insane. So thank you to everyone. Ask a question. This is not a restream. This is not a recording. I take my time answering everyone's question. That's why I say, if you ask a question, wait, I will respond. Don't spam the chat. You don't have to leave your comment 57 times. I will see everything. I get to as many people as I can in the hour. AstraZeneca, I don't know. I mean, the dividend is kind of concerning to me. The analysts are kind of mixed. There's a couple buys, there's a couple holds. Let's see here. They have a 1 year price target of $95, which is a 45% move to the upside, which is a lot. I'm actually going to put that down on my little list here, and we can do a little bit more research after the live. Of the 9 analysts covering it, 7 recommend that you buy it. CAVA is doing well, and CAVA's earnings are out today. Hey, Anya, hey, where have you been? CAVA's earnings are out today after the market closes, and I am going to be laser focused on those earnings. I might post a story. I won't do a video post because earnings report videos on my channel just never seem to do well. But I will post a little story, one of those 24-hour things at around 4:30 after their earnings are out, just so we can see what they did. Let's see here. What else do we have? Yeah, Norway, chill out, man. Thoughts on Google? I like it. Thoughts on AutoZone? We got you. AMD, is it a buy? I can't give financial advice, so I'm not going to tell you if it's a buy. The question you have to ask yourself is, do you think smart technology is going to get smarter and more prevalent in our society? My guess would be yes. NVIDIA is the champion. They're the ones who lead the way. It doesn't mean that the other companies that are in the semiconductor space, like AMD, like ARM, like maybe a little Intel, won't do well. It's just that, in my opinion, NVIDIA is the leader, but they're also the one that's up the most. So maybe as an investor, you're looking for stocks that maybe haven't gone up as much, which could try to play catch up. SCHD is the greatest dividend ETF by far. I'm a big fan. That's for John Ross, who was asking about it. Problem on March 12th. I don't know what that means. Hey, Anya, thank you so much for all the gifts. GameStop, wouldn't touch it. CBay, I'm not sure what CBay is. Sima Bay Therapeutics, is this a penny stock? No, it's not. It's $32. It's up 311% in the last 12 months. In the last 5 years, it's up 181%. In the last 10 years, it's up 300%. Year to date, it's up 36%. Their grades are a total mixed bag. D+ for valuation, A for growth, D for profitability, A+ for momentum, D for revisions. It's got holds across the board from analysts. The revenues, whatever's going on with this company, they didn't report. Oh, that's quarterly. Let me go to annual. They didn't report any earnings from 2018 to 2022, which is odd to me. Revenue in 2017, which is the last one before 2023, was 10 million. And then in 2023, the revenue jumped to 31 million. Not really sure, not really a lot here on that one. What is the most accessible book, Introduction to Investing? Canned Fruit Loops. Go on my link tree here on my bio on TikTok. TikTok will say there's a warning. Are you sure you want to click on this link? It just takes you to a link tree. If you don't want to click on it through TikTok, it's the same link on Instagram, and it'll take you directly. There's an Amazon storefront with some books that I recommend. I only read two. The two that I read were The Neatest Little Guide to Stock Market Investing by Jason Kelly. It's on Amazon. It's like $12. And the other one was a stock trading book by Nicholas Darvis, who wrote the book in the 50s and the 60s. And it's really more for swing trading and momentum trading if you're interested in trading. It's this big. You'll read it in 2 days, and it's really, really cool to learn how this guy traded stocks in the 1950s overseas without the internet. And he basically invented this kind of Darvis box theory for momentum investing. Those are the only two books I ever read. There are some other books in there that have come highly recommended to me, but I've never read them. Thoughts on Core, C-O-R. Cencora, I've never heard of it. It is $236 a share. Last year, it went up 50%. Year to date, it's up 16%, which is pretty good. It has a dividend. It's under 1%. But, if they are, what are they? Healthcare distributors, maybe they're expecting a lot of growth, so they don't really feel the need to pay a big dividend. In the last 10 years, it's up 245%, which is good. In the last 5 years, it's up 187%. It's got a couple buys, one hold. Profitability is rated at A+. Valuation is D-, which means it's a little bit overvalued, which could give you a little bit of concern. But let's see how much it's overvalued. Why is it saying it's overvalued? Oh, their price to earnings is comparable. It's their price to book, which shows you the firm's assets minus liabilities and stuff like that, and it's very overvalued. So the stock is trading way more than the company's actually worth, I guess. Let's see if we can find yeah. Let me look here. C-O-R. But usually when it comes to these kinds of stocks that are in the healthcare sector, if they're making some sort of medicine or something, or they have some sort of patent pending product, people are hedging their bets that it's going to be a good investment and that it's going to pay off, which comes with higher risk. What's your forecast for the market for the short term? I think things are going to be fine. You know, people are talking more and more about a softer landing or no landing at all. It's just going to kind of glide right into a good economy. I know people say, like, what's a good economy if people aren't paid a living wage, but apparently those numbers are coming up a little bit. But you know, the problem with anything is always going to be corporate greed. It's always going to be their driving factor. So they'll pay you a higher wage and you'll be like, oh, things are good for a couple of years. And you know, you can afford more things and the price of things maybe aren't going up so much, but your pay has gone up and everything is good. And then they slowly start raising the prices of things again. So everyone who was complaining about fair wages and got the fair wages, now they raise the prices, and now all of a sudden those higher wages don't seem to go as far. And it's a cycle that goes over and over. I would bet you in 40 years, the minimum wage will be like $50 an hour. You know, milk will be like $100. You know, like it's just going to always go like that. It's maybe milk will be like $30 a gallon. And the minimum, you know, it's always going to, they're always going to be raising the prices if they're raising the wages, because their goal is to maximize profits. But I think long-term, that's very long-term. I think short-term things are going to be fine. It's also an election year, which can add a little bit of volatility, especially now with everything that's going on with Ukraine and Israel and Trump getting reelected potentially and Biden being like 500 years old. There's a lot going on right now. So I think especially Wall Street, I don't think Wall Street cares who's the president, as long as they're a two-term president, because they like consistency. So I would bet that Trump coming in would cause a lot of uncertainty and a lot of unknowns and kind of ruffle a lot of feathers that I think Wall Street might not like, just because they like consistency. So I don't know. We've got a lot going on. Is Google good? We already talked about Google. March 12th, ARM has IPO lockup. Their lockup is expiring on March 12th. Gotcha. Now, people always think that the lockup, as soon as the lockup expires, the stock dumps. And it's possible. We've seen lockups recently with CAVA where the stock pulled back a little bit, but it didn't really correct in a way that people were thinking. Like, I think people think like, oh, the lockup expires, so these investors in the company are just going to dump their shares and they're going to screw over everybody. But if the people who invested in this company really believed in the company enough to like be early investors, you know, maybe they take some gains if the stock has like a massive growth. Like, let's take a look here. ARM went up in the last year 90%. So if you got in on IPO day, let's go to their IPO. If you got in on their IPO day, which was September 11th, that's kind of a bad date to go public. If you got in on September 11th, 2023, you'd be up 136%. Now, maybe if you're a big investor and you bought 100,000 shares or 10,000 or 50,000 shares, maybe when that lockup clicks on March 12th, you go, well, I'll sell half or I'll sell a quarter. So I could see some volatility, but it's a blip on the radar. H&R Block, in terms of a stock or a place to go do your taxes. I'm not really too familiar with their stock. Year to date, it is up 2%. In the last 12 months, it's up 33%. In the last 5 years, it's up 100%. And in the last decade, it's up 62%. So it's not a big, fast moving stock. They offer a dividend, it's 2.61%, which is okay. However, they have a dividend safety grade of D, which indicates that they could cut their dividend in time, which is a little worrisome. Let's see here. Their profitability is rated at an A, but their growth is C+, their valuation is C, their revisions is C, momentum is B, probably because it's gone up so much in the last year. I'm not against it. I just think there's probably better investments. I mean, I'm looking at their growth. In 2021, it was 3.4 billion. In 2022, it was 2.8. In 2021, wait, what? What's it doing here? Oh, I'm sorry. This is weird. Maybe I should refresh the page. It's giving me like, I'm on the annual tab for revenue, but it's showing me quarterly. Let's try that again. Okay, 3.4 billion in 2021, 3.46 billion. So it went up just a little bit. In 2023, they're expecting 3.55 billion in 2024. So the growth is kind of whatever. Eli Lilly has had massive growth, massive over the last 10 years. I think it's up over 1,000% or something. It's up 1,200%. They pay a little bit of a dividend, but I don't even think Eli Lilly was expecting to have this much massive growth. Their dividend is 0.67%, so it's nothing. But you're not in a stock like this for their dividend. They also have a dividend safety grade of A+. They've also grown their dividend around 15% in the last 5 years, which is really, really good. I'm going to lower this. I feel like there's too much ceiling and not enough me. Their 9-year dividend growth is, they've grown their dividend over the last 9 years. So they've got 9 years of dividends, which is pretty impressive. The revenue is going to blow you away. Let's see here. In 2022, $28.5 billion. In 2023, $34 billion. In 2024, they're expected to do $41 billion. And then in 2025, they're expected to do $50 billion in revenue. So Eli Lilly just kind of like dominates the pharmaceutical sector. But is it too high? I mean, it's already up a massive amount. It's up 1,200%. If they can continue with their growth, it could likely go higher. Let's take a look. 1-year price target for Eli Lilly is $7.90, so it's only 2% from here. Their highest price target is $9.50. There are 19 analysts covering it, 16 buys, 3 holds. Snapchat, I don't really know about Snapchat. Let's see. It's got hold ratings across the board. It's down 35%. Sometimes a stock or a company that you really like doesn't necessarily mean it's going to be a good investment. People love their Pelotons, but the stock sucks. People use Snapchat, I guess, but the stock sucks. That's possible. It doesn't always mean just because you love it and you use it that it's worth investing in. If they're having problems monetizing, I think that was their biggest issue, was that they were having problems generating ad sales. The revenue in 2022 was $4.6 billion, and then in 2023 it was $4.6 billion. So it didn't really move much. They're expected to do $5.2 billion in 2024, and then expected to do $5.99 billion in 2025. So there is some possible growth here, but I would treat it like a lottery ticket. This is for Brian Strazek. Your comment was flagged for some reason. I don't know why, but I have unflagged it. You say, what stock platform gives the best research information or best stock research website? If you're looking to learn about the markets and like what do these terms mean? What is price to earnings? What is the consumer price index? If you're looking for like a dictionary kind of thing, Investopedia. It's a great website. You can type in any term that you've never heard of. What is the market cap? What is earnings per share? And they write it in a way that has like a 1-sentence explanation, a very long, lengthy explanation, and then they're like key takeaways kind of tab. I love Investopedia. It's a website that I used over the last 13 years when I was learning more and more about investing. I can't recommend it enough. The best research for stocks is probably a mix between Seeking Alpha and MarketWatch. A lot of people don't like Seeking Alpha because of their analysts. Anyone can contribute and write an article saying, here's why I love the stock. Okay, that's one feature out of like dozens that Seeking Alpha offers. So if you don't like the analyst, just ignore it. Just ignore the analyst and use the website for everything else. They have top stocks, top screeners, ETF screeners. It's a great website. If you want the free resource guide that I have on my website, it includes every website that I use where I do my own research. Every website, totally free. My website is kennethsuna.com. It's my first name, my last name.com. Click on the menu. A little tab will pop open for a free resource guide. There's no Patreon, there's no PayPal, there's no Venmo, there's no email. Put in your email and I'll send it to you. There's nothing like that. It is totally free right on the website, and it has all the websites that I use, including a lot of education like you're asking. Roz T198 says, how do I invest? I have a good chunk of finances. 2, looking for financial stability. Watch all of my Investing for Beginners videos. Honestly, I have videos. There's a pinned video right on my homepage that says, new to investing, do this. I would go and I would watch that video, watch my ETF videos. New investors tend to think, give me some stocks. I want to pick some stocks. That's usually the wrong approach. Usually when you're getting into investing because you're hearing everyone talk about a stock that's gone up a lot and you're like, man, maybe I should be doing this. And then you buy into the stock once it's had a massive run and you become the bag holder. You bought it at $1,000 and now it's 800. I'm talking about SMCI. But it can happen with other stocks as well. And of course you could get lucky. Someone could say, hey, buy NVIDIA, it's $400 a share. And you go, all right, I'll buy a couple shares. And before you know it, it's $700 a share. The best thing to do is have a foundation of an S&P 500 index fund and then build upon that. Dot says how to put money into an S&P 500 index funds. SPLG is the one that I own. VOO or SPY are three of the most popular. You have to open a brokerage account. You have to decide what kind of account you want, whether you're planning for retirement. Then you would open a Roth IRA or a traditional IRA, depending on your income. And if you wanted just an individual account where you could take some of the profits here and there and use it for stuff, you'd pay taxes. But, whatever. Or you could open both. You could open an individual account for some like fun money. You're going to make some trades, make a little money, hopefully, and your Roth IRA for retirement down the road. And then you buy an S&P 500 index fund. JEPI is the first put right using S&P daily options. Interesting. Why are they manipulating the stock market? Everyone believes it's real. Okay. Thoughts on Upstart. Upstart is currently $25 a share, and it has a warning. Yikes. Everything across the board is terrible with Upstart. The stock is up. It's up 40% last year, but this year it's down 36%. Their grades are terrible. Valuation, D. Growth, D-. Profitability, F. Momentum, D. Revisions, D. They have strong sells across the board, and the stock is so bad that it comes with an actual warning on Seeking Alpha. It says, warning, Upstart is at high risk of performing badly. They have negative earnings per share revisions and decelerating momentum. Yikes. Do you have any Swedish investments? No. Comment on Snapchat. I have already. It's not for me. But if you're interested in it, maybe it's right for you. AMAT, Applied Materials. But you got to do your research here. You can't just rely on one person on TikTok to say, I like it or I don't like it. If you don't know how to do your research, go watch my videos that say Stock Fight. It's a playlist here on TikTok. Find the Stock Fight playlist, and it shows you everything I look at when I'm deciding whether I want to buy a stock or not. You can go on my website. It's kennethsuna.com. Click on the menu and get the template. I have a template comparing ETFs. I have a template comparing two different stocks. Obviously, you don't have to use the second side of the template if you're just trying to do one, like Snapchat. But I just set it up to make it easier that way for people. And you can go on a website like MarketWatch and break down their financials and fill everything in. The forms, the templates are totally clickable. So you can go in and do your own research. Applied Materials is up 81% last year. Year to date, it's up 25%. They offer a dividend. It's just under 1%. It's at 0.63. Their profitability is A+, momentum is A, revisions is A-. Their growth is rated at C+, and their valuation is F, which means that they're very overvalued. Let's see here. They're using other things like, enterprise value, price to sales, which are all kind of like poorly rated. It's very in line using the price to earnings. The sector median for the semiconductors space is 24.79 times earnings, and Applied Materials is 24.79. So they're right fairly valued based on that metric. But learn using enterprise value, it's very overvalued. Using price to sales, it's very overvalued. Price of the stock versus their actual sales is, the sector median is 2.92, and price to sale for Applied Materials is 6.43. So it's a little overvalued. So I don't know. Some people don't care. They're willing to pay a little bit more. Thoughts on Lowe's earnings? Lowe's comes out. Their earnings come out today. Oh, they came out already. Let's take a look. I think Lowe's and Home Depot are very good insights into the overall economy, because in a recession, people are going to be going to Lowe's. because they're not going to be hiring people to redo their kitchens. They're going to be looking to make home repairs themselves. If their toilet is broken, maybe they won't call a plumber. They'll go and just pick up the part and go on YouTube and watch a video, save a couple bucks. In a really strong economy, people are still going to Lowe's, but this time they're getting a new refrigerator and they're upgrading their appliances, and maybe they're getting a new deck built on their house or whatever. It says here Lowe's is trading higher after the company reported better than expected Q4 results. So even though TikTok is this little bubble of people who say the world is ending and nobody is paid a fair living wage, we're getting some insights here that actually people are doing okay largely. Outside of this bubble of TikTok where it's sort of like an echo chamber of, oh, you're not paid a fair wage? Neither am I. Doesn't that suck? You can see here their earnings came in, let's see, revenue came in at $84 billion and the estimate was $85 billion, so it was off a little bit. It says that they saw same stores. Okay, so they're blaming, so they had same store comparable sales were down 6.2%. In a slowdown in do-it-yourself demand and an unfavorable January winter. So maybe it was too snowy and people didn't want to go out and shop and buy things in the store. It says that they missed some things. So sales beat the estimate. They were supposed to come in at 18.45 billion in sales, and they came in at 18.6 billion. So even with this snowy winter that they're blaming, they still outperformed sales. But they are issuing weak guidance. So let's see here. They also repurchased 1.9 million shares, and they paid 633 million in dividends. It says we remain confident in the long-term strength of the home improvement market and we are making the right investments in our total home strategy to take share. Lowe's expects revenue of 84 to 85 billion for 2024, which is a little bit lower than Wall Street's expectations of 85.61 billion. I don't understand. What are your thoughts on options trading? I don't mess with options. Maybe I'll sell covered calls every once in a while, but I don't really like to because my cost basis is so low. The purchase price that I first made in an investment, like WWE, TKO, Apple, Meta, Tesla. I bought all these stocks years ago. NVDA, even. I bought NVDA at 125. It's 700 something now. Why would I sell covered calls to generate a little bit of money and risk losing that purchase price of 125? If my shares got called away, I'd owe taxes. Number one, that sucks. Number two, I'd have to repurchase the stock if I wanted to continue to hold it, which I do. So for me, I don't always write covered calls. And trading options like, oh, I think the stock is going to be up, I'll buy a call, or I think the stock is going to be down, I'll buy a put. I've lost money almost 90% of the time. I've never made money trading options. I know some people do. I wasn't one of them. So I just said, you know what? I'm good at stocks. I'm going to stick to stocks. Thoughts on AMD, we've already talked about. CAVA posted earnings early. Oh, shit. Really? The stock is up 6.51%. Whoa. So somebody in my comments yesterday said they thought CAVA would go up 10% after earnings. This is so funny. Why did they post earnings early? They were supposed to report them today. Earnings per share is up 2 cents. Year-over-year sales beat the estimate. Hot dog. The estimate was for sales, they were estimated to do 174.29 million. They ended up doing 177.17 million. So they beat. Let's see here. Adjusted earnings before all that other stuff, EBITDA, came in at 86 million to 92 million. Hold on, let me just open this. Let's see here. Oops. Same restaurant sales are up 3 to 5%. Restaurant level profit margins are around 22 to 23%. All very good. It's got let's see here, is maintained at an outperform by Wedbush. It's up 6.62%. Very good news. Sorry I was swamped by meetings at the new job. Hey, new job, congratulations. Net worth I don't share because it's irrelevant to you. Palantir, I like Palantir. Their government contracts give me a little bit of peace of mind, and their artificial intelligence also gives me a lot of hope for the future because that's going to be the next big disruptive thing. RIVN, I like RIVN. I own some RIVN. I just don't know at this point. But this is a good question because it always goes back to what I always say about these highly speculative stocks. Only put in what you're willing to lose. RIVN year to date is down 54%. I own RIVN stock. Am I sitting here going, oh my God? No, because I only put in what I was willing to lose. The majority of my money is in very high quality investments and index funds. So when I play a little bit and I go, oh, RIVN looks interesting, I'm only putting in what I'm willing to lose. That way, if I lose it, it is what it is. No big deal. I don't know at this point if I would take a chance on RIVN right now, other than like a lottery ticket. If I was down, am I going to average down? So if I had 100 shares, would I be buying another 100 shares now that I'm down 50%? Typically, so you always hear people say, buy the dip, buy the dip. My concern when it comes to buying the dip is that they buy the dip every time the stock drops, 1%, 2%. They go, buy the dip. That's not really what it means. Buying the dip is like big down days. When the stock is down 25, 30, 40%, that's when you buy the dip. You will run out of money really quick if you're buying every time the stock drops 1 or 2 or 5%. You will run out of money really quick. And then when the real dip is here, you'll have no money left. So I typically average in when the stock is down 25 and 50%. If it's a stock I still believe in and still want to own. If I don't, if it's something that I think is really high risk and I'm down 50%, I'm not averaging in. I view it as flushing money. I'm throwing good money into a bad investment. Why would I do that? And that's kind of where I am on RIVN right now. So I'm not going to be averaging down. If I had 100 shares, I wouldn't be buying another 100 here to lower my cost basis. I would just be going, we'll see what happens. I would only consider at this point investing more in RIVN if the turnaround came, which could be months, quarters, a year away. So you might say, but it's $10. You should buy it now. It's $10. It could go to $3. It could go to $1. Nobody knows. I would rather buy the stock at $18 than risk buying it at $10 to know that the turnaround is here. And that might sound silly. You might say, well, that's counterintuitive. Buy low, sell high. But with something super high risk like this, I would rather buy high into the confidence. Thoughts on VIX for daily day trading? Let's see here. So the VIX is the futures index. VIX is the fear index, and the higher the VIX, the more volatility there is in the market, right? Is that right? VIX index. Let me just double check before I say anything. Yeah, okay. Just have to double check. When the VIX is low, volatility is low. When the VIX is high, volatility is increased, which can tell you that people are a little nervous, they're a little afraid. Let's see, the VIX is currently 13. I know if it's in the 20s, it's usually much higher volatility, which we saw in October. It was 21. Now it's 13. So the volatility is kind of cooled down. VIX is down 28% year to date. Their expense ratio is insane. It's 1.77%. That is insane. It's a 2x leveraged fund, which means that if you buy it, you're doubling your returns, but you can also double your losses as well. Not a big fan of anything leveraged. How to divert capital gains from a property sale? You would need to hire an accountant. So on the lists, this is from Kind Hearted. What do you think? It seems SPYI is better. I think a lot of people prefer SPYI because they give you a little exposure to the overall markets, and they give you a pretty high dividend, and they give you relatively low fees. From Coco, what do you think about Lemonade? Somebody asked me the other day, they said that there's a video going around on TikTok where someone is saying Lemonade is going to be the next NVIDIA. I would be careful with, I don't know, like in the influencer space, they call it like a hook. That's a very good hook. Is Lemonade the next NVIDIA? And then everyone goes, well, wait a minute. NVIDIA, I know that. It went up several 100% last year. So then they look at it and they go, it's the next one. And they rush into the stock without really knowing much about it, just thinking, hey, I'm going to buy it at $21 and it's going to go to $300 and I'm going to get really, really rich. You have to be really careful. I don't know, Coco, I don't know if you saw that video as well or if you're just genuinely asking. But if there is a video going out there comparing NVIDIA or Lemonade saying it's going to be the property and casualty insurance is what their sector is, but they're going to be like the NVIDIA of that sector, makes me a little nervous. NVIDIA is one of a kind right now. That space is really booming. It's all because of smart technology and artificial intelligence, and people are piling in now because they realize that this is going to be the wave of the future. Is a property and casualty insurance the wave of the future? Maybe some people will use it, but I don't think it's going to be like soaked into every part of our life. I mean, smartphones, smart computer, smart television, smart microwave, smart car, wearable headsets, watches, all this technology is smart this, smart that, and they all use semiconductors. Is Lemonade, is a property and casualty insurance gonna so I would be weary of comparing it to something like NVIDIA. But that doesn't mean it's bad. It's just that's the hook whoever this influencer or content creator is using. That's the hook they're using, which I don't like. Valuation is D+, growth is C+, profitability is F. So across the board on the big three, valuation, growth, and profitability, poorly scored. The only good grade they have is A+, for momentum. Makes sense. It's up 30% year to date. And revisions is a B. They don't offer a dividend. They're expecting a lot of big growth. So revenues are $256 million for 2022. 2023 is going to come in at around $427 million. And their forecast for 2024 is $529 million. So they're still relatively a little baby. They're not making billions in revenue. They're making $500 million in a year expected in 2 years. In 2020, well, I guess this year. They're expected to do, it's a pretty big jump from 427 for 2023 to 520 million for 2024. Maybe a little bit as a somewhat of a speculative investment. I wouldn't be totally against it, but I don't think it's going to go crazy like NVIDIA. So their 1 year price target, according to the analyst, is $15. They've already blown past that estimate. Their next highest price target was $17. It's $20 now, so they've blown past that one. Let me see here. I just don't, I don't know. There's 4 analysts covering Lemonade. 4 give it a hold, 3 give it a hold, 1 gives it a sell. What about DWAC stock? Personally, wouldn't touch anything associated with Trump. I just think, hello? What's going on here? My keyboard froze. DWAC, Digital World Acquisition Corp, is up 163% year to date, which is insane. It was $17 at the beginning of the year. It's $46 now. I wouldn't chase something that's up that much. Trump businesses don't always do the best. So I would be very weary of putting my name into, or my money into his name. Thoughts on MFEKX? MFEKX. Let's see here. It is a growth retirement fund. It invests in growth stocks of large cap companies. Let's see here. I'm wondering if it's, I've never heard of this, so I'm not sure if it's like a target date fund. I don't know why they're calling it retirement, because it doesn't feel to me like it is a target date fund. Let's look here. But their fees are relatively low, 0.5. It just says that they seek capital appreciation. My guess is that they're calling this a retirement fund because they're billing it as like the only account you need. Let's see here. Their top 10 holdings are Microsoft, NVIDIA, Amazon, Alphabet, that's Google, Apple, Meta, that's Facebook, MasterCard, Visa, Eli Lilly, and a company called Boston Scientific, who I've never heard of. They only hold 65 companies. I think maybe their like gimmick here is that it's like, it's just it's a mutual fund, which provides long-term capital growth. I don't think it's a target date, anything sort of account like that. I think they're just calling it like a retirement fund, like it's good for you to hold forever. I like it. I don't see anything particularly wrong with this fund. It's up 40% in the last year. It's up 82% in the last 5 years. It's up 175% in the last 10 years. It looks like they've kind of like cherry picked the biggest winners from the S&P 500 and put it in this fund. Because they only have 65 companies in it. Normally, you say mutual funds and actively managed funds don't long-term outperform the overall markets. It looks like this one is like neck and neck, like tied with an S&P 500, which is up like 171%. Let's see here. I don't think it pays. Does it pay a dividend? It says that they don't pay a dividend currently, which is interesting. What do you believe about options trading? Don't like it. I lose a lot of money. BRK all the way. I've answered your comment on core, but we can do it again if you didn't hear it. Or maybe I'm just caught up on the all the way. I don't trade options. I lose all my money on options. I've never been able to make it work for me. I know some people have. It's not for me. Sencora you asked about is it's got a couple buy ratings, one hold. It's up 50% in the last year. Year to date, it's up 14%. It offers a very small dividend. They have a dividend safety grade of A+, and they've had 19 years of dividend growth, which is very good. Their valuation is D-, their growth is C+, their profitability is A+. This is Sencora for Burke all the way, Burke B all the way. Profitability A+, momentum B, revisions A+. It's a healthcare distributor. The revenue is slowly climbing. So in 2022, 238 billion. In 2023, 262 billion. In 2024, they're estimated to do 292 billion. And then someone was calling me. They're estimated to do 310 billion. So revenue is slowly increasing. What do you think about Bitcoin? I like it. I own it. Thoughts on buying Leaps in cybersecurity ETF? Leap options are kind of the only option that I would personally consider. It just means it's a long-term expiration. So instead of buying an option contract that expires next week or in 2 months or a month from now, a Leap says, it expires in 2025. So it's a very long way out. It gives you more time in the investment to work in your favor. And cybersecurity, I think, is going to be a very important. I think it's going to be a very important sector in the future with the amount of scams and phishing and artificial intelligence and deep fake videos. Can you look at Berkshire earnings? Yes. Berkshire. When were their earnings? Was it yesterday? Berkshire. Okay, here we go. Well, it says unable to locate the article. Okay. The company reported fourth quarter operating earnings after taxes of $8.48 billion, up 28% from a year ago. 28% from a year ago for their earnings. Their operating profit was up 30% versus fourth quarter from 2022 and above the estimate consensus of, I guess this is 5.7 billion, and they came in at 5.8. There remain only a handful of companies in the country that can truly move the needle at Berkshire, and they have endlessly picked over and have been endlessly picked over by us and others. Outside of the US, there are essentially no candidates that are meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. That's interesting. But maybe people don't care about eye-popping performance. I mean, that's never been Warren Buffett's thing. He's always been a value investor, buying Coca-Cola and McDonald's and stuff that pays, slowly over time. Let's see here. Yeah, it's funny. The one article that has their earnings says that you can't find it. All right. Hey, Murray, what's up? Cava, yes. Norway, you're still in here. I don't know. I don't have any thoughts on Acre Carbon Care, and I will probably block you soon if you keep spamming. All right, I'm going to drop down all the way to the bottom. I'll work my way up. We've got 9 minutes left. Lucky Strike, SOUNDHOUND. I posted a video about them yesterday. Go check it out. It's on my page. Look up ELF. ELF Beauty is up 2%. Exotic Plants, I just came to find out that CAVA already released their earnings, even though it was set to be out later today. They've already released them this morning, and it was very, very good. I've already talked about the CAVA earnings, so I will be downloading this live and putting it up on my YouTube channel later. It was close to, we just talked about it, so we're at the 52-minute mark of this live. So if you go on YouTube later, jump to like the 30-ish minute mark, and you'll probably find it there. ELF Beauty is crazy. Right now, let's see here. Like in the last year, the stock is up 174%. That's insane. In the last 5 years, it's up 2,047%. That's insane. In the last decade, it is up, well, it hasn't been public that long, but since going public in 2016, the stock is up 624%. Earlier, somebody said, like, what do you think about Snapchat? And I said, hey, just because you use a company doesn't mean it's a great investment. If you use ELF, if you buy anything from ELF Beauty, you should have been investing in that company as well, because this stock has just been unstoppable. Oops. Did I leave? No, I'm still here. Revenue came in 2023 at $578 million. They're expected in 2024 to do $992 million. And in 2025, $1.26 billion. That's huge, huge revenue growth. For context, in 2019, they did $267 million. So they were just slowly, 260, 280, 318, 392, and then 578, and then expected to do 900 million, and then $1 billion. Massive growth for ELF Beauty. They are currently $200 a share, but this thing could keep going. Let's see what the 1-year price target is. It's currently 200. The 1-year price target was 200, and they smashed it. The next highest price target is 220. There are 13 analysts covering ELF Beauty, 8 buys, 5 holds, 0 sells. Do you have a daily, weekly, monthly routine on how you analyze stocks? Not really. No daily or monthly. Usually for me, if you've ever seen my stock fight video, that's kind of what I do. I type in this template, I fill it out. It's available on my website, by the way, totally for free. It's kennethsuna.com. There's no catch. There's no email sign up. There's no PayPal. Give me $1 and it'll unlock. Nothing like that. It's totally free. And the templates are usually what I use in my own research. And I'm basically deciding, I don't care weekly to monthly. I'm thinking the next decade. Someone says it's not stopping. I don't know what that was in relation to. I love ELF. It's so high. That's Kiki. Yeah, ELF, is definitely worth considering, just given their massive growth that they're forecasting. And the beauty industry, it's $1 billion industry, and we all know it. Like, everyone buys. I mean, there's probably something for everyone at ELF Beauty. I bet there's even something for me there. I bet they have like beard balms and oils, and I bet they have all kinds of stuff for everybody. So let me see. Let's just see. ELF is awesome. People like it. Where's the cute dog? She's hiding. She's downstairs. Elf. Yes, a lot of people are asking about Elf. Maybe I'll make a video on Elf running down their earnings. Let's see here. They have Elf Cosmetics, Elf Skin. In Elf We Trust. Who's this guy? Is that the guy from Suits? Is this the guy from Suits? Does he work for Elf? Look, that's the guy from Suits, if you ever watch that TV show. That's funny. All right. Walmart thoughts. I like Walmart. I think their purchase of Vizio is going to be huge for them. It's going to suck too because they're not buying because they want to be in the entertainment space. They're buying Vizio from Sony because they want to be in the advertising space. If you ever turn on your Fire Stick, the commercials that they run or like the screensavers things that they turn into ads. So if you pause your screen on anything, it's going to come up an ad for Charmin toilet paper or whatever. And there's a little buy button. You can hit buy. And if your Amazon account is synced to it, you can buy it right there on your television. And then they know that, you like to buy, you buy while you watch television. This is a huge market for Walmart as well. Walmart is trying to be in that space as well. So you get a Vizio television and you link your Walmart account to it. You're going to be seeing ads. Do you want to order this dog food? Do you want to order this thing? Hey, we noticed you bought this energy drink a month ago. Do you want to buy more from Walmart Plus or whatever they call it? I don't know. So it's probably good news. Thoughts on Google. We talked about Google earlier. I think ad sales for them are just going to continue to go up. That's where they make a lot of their money from. Let's see here. Google revenue is just steadily climbing. $250 billion in 2021, $282 billion in 2022, $307 billion in 2023, $342 billion is the estimate for 2024. $378 billion is the estimate for 2025. They're just going to keep growing and getting larger and larger. They're strong buys across the board. It's up 354% in the last decade. What is your take on SoundHound? I just posted a video on SoundHound yesterday, so when you leave this live, you can go watch it. Walmart thoughts, we've talked about. Thoughts on Google, we've talked about. Wolf Speed, please. I've never heard of it. Wolf Speed? What the hell is that? The symbol is wolf. It's $25 a share. Semiconductors. The headline says full speed ahead. It's got a couple of hold recommendations, a couple of buy recommendations. Their profitability is F. Their momentum is F. Their growth is A. Their revisions is B+. Their valuation is C. It is down 64% last year. It's down 40% this year. I don't know why, as a semiconductor stock, you would consider anything other than like the big three. Like, let's see, NVIDIA, ARM, AMD. Those are the big three. I don't know why you would look at something like this that's down 40% when all the other semiconductor stocks are just crushing it, unless you were looking for like a hidden gem or something, which this could be. I don't know. I've never heard of this company. But their revenue in 2023 was $921 million, and the revenue expected for 2024 is $837 million. So a big dip. I don't know if that's for me. Palo Alto, I think everyone is talking about because Nancy Pelosi just bought some, or her husband did. I hate these videos where they say, Nancy bought some calls on this thing. No, she didn't. Her husband is the one who's doing all of that. He's a fund manager. But I get it. It's triggering for people what Nancy Pelosi is doing. It's up 4% today. It is also in the system software information technology sector, which is just going to lead the way in the future. They don't offer a dividend. Their growth is 271% in the last 5 years, 1,100% in the last 10 years. So lots of growth for them. And I think they have a pretty high one-year price target as well. Let's see, PanW one-year price target is 338, so a 7% move. Of the 40 analysts covering the stock, 28 recommend you buy it, 12 recommend you hold it, 0 sells. I've never heard of this one. Someone's asking about something called Figs. It's Figs Incorporated. It's $5. It's apparel and luxury goods. Never heard of it. My biggest stop loss is Jones Soda, down 95%. We putting some money in low cost index funds today, boy. Yes, do whatever you want. I love low cost index funds. The driving crooner says, yo, I'm trying to get 4.45% for 20 years. Go for it. Good luck. Would you invest in a cabin on a lake as an investment? Yes, I would. What is NOLYM? Never heard of it. NOLYM. Don't know. Accounts I should be looking into opening this summer. Roth IRA or traditional IRA, depending on your income. Individual account. Palo Alto after Nancy Pelosi. Look, the thing about Nancy Pelosi trades, it's so misguided to say she just bought it. Usually their forms are anywhere from a month to 3 months old news. So she might have bought this investment 3 months ago. So looking at it going, oh, she just bought it. Let's all pile in on the thing she just bought. You're usually getting old news. Their filings are a month old. Sometimes they're 3 months old. It's up year to date 7%. It's likely that she purchased it, let's see. She could have purchased it 3 months ago and she could be up 15, 20% already. And you're getting to it now. It's old news. It's already had its run. It's up 36% in the last 6 months. It's down 7% this month. I think there was some sort of issue here. Let's see here. Palo Alto surged 9% on Monday after Nancy Pelosi disclosed that she bought a position. The purchase was made, on February 12th. Okay, so it was relatively recently. Another purchase was made on February 21st. The same day, shares plummeted after the company lowered its full-year revenue and billings. So maybe she's making a bet that things are going to recover for them in the future. She bought some call options that I thought were... it's not saying, at least here, it's not saying what contracts she bought, whether they're like leap options, like they expire in a year or 2 years out. I don't know. Bitcoin, 57,000, 3,000 in 1 day. Yes, very good. Very good day for Bitcoin. Walmart, we've already talked about. I will be reposting this live on my YouTube later today. So if you missed anything, we talked about, we talked about Walmart. I'm writing down a list here so I can keep notes when I post the video. We talked about Walmart, Elf, Lemonade versus NVIDIA. We've talked about Palo Alto. I'll put that on the list. Did you buy Walmart? No, I didn't. NVIDIA has to come back to earth at some point, right? Yes, it does. But here's the thing. When's that going to be? Nobody knows. It's down a little bit today. It's down $3. Hardly coming back down to reality. Let's say you wanted to buy NVIDIA at $700 a share and you waited. And you ended up buying it at like $710 and you're worried, what if I buy it at $710 and it drops? There's no way to know when the stock is going to drop. You could buy it at $710, it could go up to $780 and then dump and go all the way to $690. Or you could buy it at $710 and it could go all the way up to $778 or $788 and then drop to $750. In which case, or it could drop all the way to $720, in which case you'd still be up. There's no way to know, there's no way to calculate, there's no way to guess when the pullback is going to come. Maybe someone was buying it at 600 going, oh man, it's going to be all over here. I'm going to buy it at 600 and it's going to be 500 in a week. And now it's 778 and they're pretty happy. There's no way to know when that reality, when it's going to pull back a little bit and come back a little bit closer to earth. Like you said, it's got to come back to earth at some point. It keeps hitting new highs. Super Microcomputer is a little bit of an example here of a stock that was 400. Let's see, in January of the beginning of this year, it was $340. Let me see here. It was $285 at the beginning of the new year. Within a month and a half, it went up to $1,004. And people were piling in at $1,000. I am sure someone out there bought Super Microcomputer at $1,004 and they're still holding it, even though it's $850. But nobody knew when it was going to come back down to reality. Someone could have bought it at $500 thinking, it's gonna dip here, and it didn't. Someone bought it at $1,000 saying it's going to go to $1,500. And then even if it pulls back to $1,400 or $1,500 or $1,300, I'll still be up. And they bought it at the wrong time. There's no way to know. The only question you can ask yourself is, why am I investing in this company? Am I investing in Supermicro Computer because everyone else got rich and I want to get rich? Because that's the wrong reason to invest. And usually it means that someone's going to wait too long, buy it at the top, and then regret it. On the other hand, if you're investing for the next 20 or 30 years, it doesn't really matter. So, NVIDIA, yeah, maybe you buy it today at 778 or 788, and it goes to 702 next month. Everyone takes their profits. They get freaked out. Maybe there's the news of a recession. Oh, it's actually going to be really bad. And everyone freaks out and they sell their NVIDIA stock. You don't. You bought it at 780. It's now 702. Who really cares? You can buy a little bit more because you're not worried about a recession. You're thinking of the next 10, 20, 30 years. Let's see what we've got. Did you say NetSpace? No. Does this mean NVIDIA is too risky to buy now? It could. It could be a little bit too risky at these prices, but that's a personal call. You have to decide what's best for you. Buying Supermicro Computer at 1,004, someone might have said, it's not risky, it's going to keep going. And someone else might have said, I feel a little weird about this. And they would have happened to have been right. There's really no way to know. Opinion about Berkshire B, I like it. A lot of people view it as like an ETF, even though it isn't. It's a stock, but because they have so much exposure to a variety of different companies, it insulates your portfolio like an ETF would. Lemonade is casualty and property insurance. Berk B, you're doing all the way. Let's see here. You're doing a great job, Kenneth. Best trifecta 3 times a week on TikTok. Yes, Tuesdays, Thursdays, Sundays at 10 a.m. Eastern time. Thoughts on RIYL. Someone asked about this yesterday or on Sunday, and I'd never heard of it. There's like no information about this company. It doesn't even say what they do. They have a 25% dividend. That seems crazy to me. The stock is down 58% last year. It's down 22% this year. I don't know what they do. It just says B. Riley Financial. But there's no information here. I would be very weary of that. All right, got to wrap this live up. There are 99 questions that I didn't get to. Supermicro Computer we've talked about already. RIVN is all the way down. Thoughts? Yeah, we've talked about RIVN earlier in the live. I'm going to post it on YouTube so you can go back and watch it. Have you ever heard of Sound? Yes, I just posted a video about SoundHound yesterday, so go watch it. Should we invest in MCI? I can't tell you. Palo Alto, we've already talked about. Moderna is a good buy. The next virus is coming. There's always probably a next virus. You should go lightning round like Mad Money. I think that's what we're doing right now. What are your thoughts on hours are you on every day? I go live every Tuesday, Thursday, and Sunday at 10 a.m. Eastern time. Let's see. Jarn, Palantir. I like Palantir. Options, their government contracts and artificial intelligence give me a lot of peace of mind for the future. What stock is the next one? The Rocket, couldn't tell you. Cost average into NVIDIA. Yes, you can absolutely average in. That's a great idea too. If you're worried about it being at all-time highs because you think it's going to go down, but you also think it could go higher, then you might want to just average in every month. What's everyone's favorite total market ETF? I think total market ETFs suck. I hate them. I think they underperform an S&P 500. Some people say, hey, total market, it has 3,000 shares, got to be good, right? But there's a lot of losers in that too that drag down the overall performance. Sometimes less is more. Please guide us on SMCI. I wouldn't. No, I don't want to do that. Sound RXRX, I don't know RXRX, but Anya, if you're still in here, I posted a video on Sound yesterday. Let's see, worrisome investing in SPYG after seeing so much growth from the top holdings. No, I'm not particularly worried. They will cycle in and out what works for them, and they'll move their holdings around. If one company starts to underperform, they'll probably boot it and they'll replace it with something else. It holds 227 companies, 45% of which are in tech. I heard Nancy bought Zscaler. She might have, I don't know. I don't really pay attention to what Nancy Pelosi is doing. I'm worrying about myself. In the money, call options expire in 2025. It might have been, if that's what you're talking about for Nancy Pelosi. Gotcha. Let's see. You don't know what you're talking about. Okay. As I said earlier, don't buy on the word on Grapevine. Riley, any thoughts? Yeah, we talked about it. I'm not sure what that is. Supermicro computer thoughts. We've talked about Supermicro already. Please guide us on SMCI. I would be very weary about a stock that has gone up that much. It's pulled back. Let's just see where it goes from here. If it hangs around in the 840s, then we'll go from there and we'll see what happens later if it starts to move higher. Kiki says, trustworthy, honest financial content. Thank you. That means a lot, especially after the guy down below that said I don't know anything. Did you say Palo Alto? Yes. Don't buy on speculation. Do your own research and works for you. I totally agree. Palo Alto, we've already talked about. Thoughts on Supermicro, we've already talked about. Please guide on Supermicro, we've talked about. Eli Lilly, we've talked about already in the live. I'm going to re-upload this onto YouTube later. We're doing a lightning round here. Walmart, we've talked about Walmart already, and I posted a video about Walmart a few days ago, so you can go check it out. Big Super Bowl ad for e.l.f. e.l.f. products equal luxury brands and product price is low. My girlfriend said that e.l.f. does something like they make their own to mimic the higher brand stuff, and it's just as good. I think that was e.l.f. How about CAVA? Their earnings came out today. It was a great earnings report. Their earnings were supposed to come out after the market closed, but they released them early. The stock is now up 8.2%. Someone in a comment on my video yesterday said Kava is going to go to 10%, up to 10% after earnings, and whoever that person was pretty close. Right now, they're up 8.22%. Why is there Goog and Google? They have two different classes of shares, Class A and Class C. One comes with voting rights and one does not come with voting rights. If you want voting rights to be able to vote on your shares, you would want Google with the L, G-O-O-G-L. G-O-O-G-L would be the one for Google. What websites are you looking at? Go onto my website. It's kennethsuna.com. Click on the menu, and you will see a free resource guide. It has every website that I use to do my own research. I'm using Seeking Alpha, Market Watch, and TipRanks Today. Have I heard of Zscaler? Yes, I have. Which beauty stock? We were talking about e.l.f. All right, I'm going to drop down to the bottom, see if there's anything else we missed, and then I'm going to wrap this live up. SPLG is my favorite S&P 500 index fund. Thoughts on SOUNDHOUND? I posted a video on them yesterday. Let's see. You are my favorite. Thank you for the great content and encouragement. Coco, thank you. Lisa, thank you. What's your opinion on Sound? I posted a video on them. Thoughts on RIVN? We've talked about RIVN earlier in the live. You can go watch this live, which I will be reposting on YouTube as soon as I wrap this thing up. All right, I think we're all caught up. All right, everybody, I'm going to wrap this live up. I go live every Tuesday, Thursday, and Sunday at 10 a.m. If I missed your question, I'm sorry. I try to get to everyone. I also try to keep this live around an hour. And of course, we always go over just a little bit. My opinion on SoundHound, go watch the video. Everyone is asking about SoundHound, go watch the video. I posted it yesterday. It's on my homepage here. Thank you, everyone. See you later. Have a nice day. Thanks for watching. And thank you for all the new followers. By the way, there are a lot of scam accounts out there, so be careful. You're going to get, if you're a new follower, you're going to get about 15 Trade, Invest, Simplify rip-off accounts following you. Instantly block them, report them all. I won't follow you back just so it clears out any of the confusion here. I won't follow you. So if you see an account that looks like me, it's not me. Don't DM them. They will DM you and they'll say, hey, how are your investments? Block them, report them. All right, see you later. Bye, everybody.